Hi there, welcome to Market Call. Keith Richards is our guest, kicking us off for the week. He's president and portfolio manager at ValueTrend Wealth Management, and he'll take your questions on technical analysis. The number to call right now, 1-855-326-6266, or email Keith, marketcall@BNNBloomberg.ca. It is great to see you. Thank you very much for joining us.
Good to be here.
So at ValueTrend.ca, you publish, I think it's monthly, a barometer.
Yeah,
and it assesses, well, what exactly does it assess?
Well, it's really a risk-reward assessment. It's not a market timing tool. It doesn't say buy now or sell now. What it tells you is your relative trade-off. So I look at 11 factors. Some of them are trend, some of them are value, fundamental stuff for me. A lot of it is sentiment. I use breadth. If anybody knows what breadth is, it's the scope of the market participation. So I have all these 11 factors, and then they each get a score. And it's like a 0 to 8. And some of them can get negative, so subtract. But at the end of the day, 0 is run for the hills.
Very risky.
Very risky on a relative basis. And then 8 is back up the truck. And we're at about 3 right now, which is okay, but not wonderful.
It's not great.
It's not great. Yeah, and it's been there like that all year so far, like 6-7 months now. It's basically been 3, pretty much.
Right.
2, 3. Once we got a 4, it's been just kind of in that zone.
I mean, it's been an okay year for the markets.
2 or 3% up on the S&P. Good, really good for the TSX.
In Canadian dollar terms, you mean?
Yeah. So this, I should note that this is looking at the S&P 500. It's not looking at the TSX. So all those factors are based on the U.S. markets. So it's been correct because it's been kind of a mediocre year.
Sorry, but the S&P, as you can see, is up
it's new highs.
7 and change, though, this year, Keith.
Yeah, I mean, I guess you're correct on that. My apologies, but sure. I mean, for the better part of it, it's the meter wasn't saying run for the hills, but the meter has been saying it's been pretty choppy, as we know, and we also know that it's not been a bang-out year for sure.
No.
And there's certainly potential for more volatility given this meter's reading. It was correct at the beginning of the year. We saw lots of volatility, and I think it's just telling us that there's a potential for continued volatility. It doesn't mean run for the hills, but it does mean just keep an eye, as we like to say.
Is there a particularly bearish indicator that jumps out for you right now, or risk indicator? Yeah,
so there's something we do called smart money, dumb money, and it's really just data on all kinds of stuff like insider trading, like are the insiders buying their own stocks, the large institutions, so commercial hedgers. Let's take an example of a gold company like Barrick. They will often, I don't think they're hedging right now, but they often hedge their products, same with, copper miners, et cetera. So and even Teachers Pension Plan, they will often hedge, for example, OMERS and all them, they hedge the equity portfolios if they feel there's more risk. They use futures and hedge. So what we do is we look at what they're doing, we get data on that, and if smart money, meaning the more sophisticated investors, is less bullish, and retail money, we call it dumb money, but it's not an insult to anybody, but retail money is more bullish, that's generally a bad sign, because if the Warren Buffetts of the world are selling, and if the Joe Schmo is buying, it's often a sign of not so good risk reward.
Of course, that assumes that professionals do have a better idea of where the market is going. They may not.
Yeah. So what we've found, it's again data that I get from sentimenttrader.com. There are certain groups that are accurate, and you're true. Like if you looked at the National Association of Investment Managers, NAAIM, they're usually wrong at the wrong times. It's true. Portfolio managers, people like in my business, are often wrong, but just as wrong as retail money often. But if we look at, some of the best portfolio managers, if we look at some of these pension managers, they're often very right. If we look at commercial hedgers, they know their product better than we do. They're often very right about their hedging strategies. So that's what we're looking at and insiders, they know their own stocks, right? So these are what we call the smart money. It's not necessarily portfolio managers.
Okay, yeah, we got the one and only Keith Richards of ValueTrend Wealth Management joining us today, taking your questions on technical analysis. Let's put up that number again, 1-855-326-6266. We'll be right back. Costa in Harrington, Quebec is our first caller of the week. Go ahead, please.
Hello, gentlemen. Thank you so much for taking my call. Mr. Richards, I would kindly appreciate your knowledge and wisdom on my favorite company in the world, Mark Leonard's Constellation Software.
Thanks, Costa.
Yeah, it is a great company. And, you can't argue with the chart, can you? It's going up. This is my business is so simple, right? Up is good, down is bad. But yes, if we kind of look at what's happening right now, it's hitting its old high, and if I clear the screen, you can see it's kind of leveled off after playing with the old high or close to it. So it might be in one of those consolidation periods. And that often happens. I mean, look back mid-22, it went up and down a little bit before it broke out. It could be doing that right now. But net, the stock has been in an uptrend for a long time, and it takes the odd pause, and there's no reason to be concerned, I don't think.
Right. It's tough, isn't it, with a stock that has been so consistent? Well, yeah. I guess consistency in itself
is good.
Yeah, yeah. Joseph is in Montreal. Fire ahead, Joseph, please.
Good day. Thanks for taking my call.
Pleasure.
Keith, want to get your opinion on Costco. It's supposed to be one of those steady eddies, but in the last month and a half, 6 weeks, I guess, it's not done very well. My question right now is specifically about Costco, but more generally about sell signals. Back on Wednesday or Thursday, it dipped below the 200, and it stayed below that for the last few days now. I know you like to have a rule about 3 advancing soldiers, or I guess in this case 3 retreating soldiers. So I'm getting maybe some possibly conflicting information. It's below the 200, so it's been that way since Thursday. So Thursday it was below the 200. Friday it was up modestly, not enough to bring it above the 200, and today it's up again modestly, again not enough to bring it above the 200-day moving average. So we have 3 not quite advancing soldiers, but it's still below the 200. This seems like conflicting information. How do you interpret this? And would now be a good time to sell Costco? Thanks.
Yeah, I love this question. Thank you. So maybe I should get a closer view. This is a 5-year chart. If we maybe do a 3-year, I can sort of illustrate this better. Mm-hmm. But just in a nutshell, my base trend following rules are simple as all get out, okay? Yes, you're right, Costa, Joseph, I'm calling you Costco, your name isn't Costco. Joseph, I use the 200-day moving average, but the other thing I look at is peaks and troughs, okay? And this is the basic, technical analysis 101. So we look at the last low, we look at the last high. We got another high that hit the previous high, okay? Now we're gonna actually zoom in on a 3-year chart, so I'll get to show you a little bit better here. There we go. Okay, is this the 3-year? Yeah, okay. Mm-hmm. So here we go. So 2 relatively similar peaks. There's the last trough, okay? So now it may be below the 200, so this might be the 200. I'm just faking it here. And now it's below the 200, but it hasn't dropped below the last trough, okay? So that's the second screen. So long as it holds above the last trough, you're safe, because you've got one of your 2 rules that have triggered the sell rules, which is the 200, but the other rule is it's got to break the last low. So far it hasn't, so I wouldn't go into full panic right now. I would probably hold the stock. If it breaks, then you get out, but it's not broken the second rule.
Looks okay for now.
Yeah.
Okay.
Yeah.
Control room, maybe you could help me here. I'm having a bit of trouble. Who is our next caller? I'm having trouble with Anne from Scarborough, Ontario. Go ahead, please, Anne. Sorry about that.
Keith, Paul Harris once said that anyone who doesn't tie their own bow tie should not be wearing one. Hence my first question. Tie your own bow tie, or is it a pre-tied? And secondly, please, your technical analysis of Fairfax. Please and thank you.
Thank you.
All right. So if you don't tie your own bow ties, that's the equivalent of buying $3 wine at the corner store. Okay. So no, this is a properly tied bow tie. Like heaven forbid, right? That I'd ever break that rule. So Fairfax, FFH. This is a company we've been in and out of this stock. We probably should have just stayed in forever. It's a really good company. Premwatsa, isn't it? It's Premwatsa, yeah. Yep. On a trend line, yeah, it's probably arced off the trend line a little bit, and any stock does that every once in a while. Then it'll pull back a bit here and there. It'll probably pull back a bit, but the trend is good. And if you're in the stock right now, I would definitely be holding it. And if it pulls back, buy some more.
Deborah is in Okanagan Falls, BC. Deborah, good to hear from you. Go ahead, please.
Oh, hi. Good morning, gentlemen.
Hi.
My question today is on Cameco, CCO. I'm familiar with the fundamentals of the company, and Keith, I would love to get your reading on the chart. It has reached a high of 109 and is on a little bit of a pullback today. And also, Andy, I'd just like to comment, it really would be interesting to have a technical analyst and a fundamental consultant on the show at the same time, because both really use both sides of the coin for the buy and sell.
Yeah, actually, interesting you say that, Deborah, because once we had Craig, my CFA associate, come in. We both did the show together. And also, Deborah, if you're interested, I do videos, and I did a video called "The Day in the Life of a Portfolio Manager," and it's got Craig and I, and we go through a process of decision making, and you can sort of see how we do it. So now, Cameco. So we own the stock. So I have to disclose whenever we own something. And yeah, it's been on fire. It broke out. We used to trade it. We used to go, and go in and out of it. And then it broke out. And we said, we always give a stock a chance to break out. And this time it held for more than a few days. And we took a few profits recently because it's a little bit parabolic. But I mean, quite frankly, we cut our position in half, and that's only because it rose so much that we didn't want an overweight position. We still like the stock. We're still in it. We have taken some profits on some of our position. I see nothing wrong with this position beyond being a little overbought. Yes, it could retrace a bit. We're almost kind of expecting that, which is why we sold a bit of it, but we wouldn't bail out of this position. We like it a lot.
We're going to take a break. Keith Richards is taking your questions on technical analysis. 1-855-326-6266. Let's head to London, Ontario. John, go ahead, please.
Thank you, Andrew. Hello, Keith. My question is on Google, who report on Wednesday. Google's fundamentals are strong. Valuation is the cheapest among the Mag 7. Good cash flow, good growth, good momentum after the dip in April. What does the chart tell me about Google? Is it a hold or is it an add for me? Thanks very much, Keith.
Thanks.
Okay, yeah, I understand they're one of the real leaders in AI as well. So, yeah, it's a great chart. I mean, the only thing I would be a little bit aware of is that it does look like it's broken. So this could be sort of a head and shoulders formation, which can be bad, but I'm not saying it's bad. But it's a point of resistance. It does look like it's broken that. But at this point, I would suggest that it's probably at least a hold. I'm not sure that I would be piling more in. It depends on your position size, but net, it's not a bad chart. There's nothing wrong with the chart. It's just there's the old high you got to cross, and that's that potential maybe head and shoulders top. I'm just saying I'm going to give it a 7 out of 10. So how's that? There's a wishy-washy answer, but it's definitely a hold.
It's been a laggard among the Mag 7. I mean, Meta, for example, has blown it away this year. Is that a thing in technical analysis when you lag your peer group? Yeah, absolutely. So that's called comparative relative strength. And it's funny because I'm just reading a book on momentum trading, and that was the idea is that you filter both based on momentum itself plus relative strength, and use those two together. And the author of the book is claiming that this system beats all other systems. So who knows? And there's a look at the 5 years, so you can see, Alphabet really slumped at the start of this year, and then new highs on Meta, and not new highs on Alphabet. So, that's something definitely to keep in mind. It's interesting there, Meta lagged for quite a while. I think that was partly because people were worried about Zuckerberg spending on virtual reality, heavy capex, and then AI. We have an email from KB. What are your thoughts on Canadian Tire? Well, let's take a look. I haven't looked at this stock for a while. Okay, actually, I'm really glad we're looking at this chart because I haven't looked at Canadian Tire for quite a while. And that there is your resistance point, somewhere around that level. And you can see it's bounced off this a few times. So it may be breaking out. You have the old peak from 21, but we discount the further back in time, the less important the peaks are. But there was some rhythm to this stock, and you can see that. And it's now reaching
around the old high. If it can continue to break out, and it does appear to be doing that, but if it continues, then I would be adding to my position. I usually give a position like this when we were talking about Cameco, how it was going sideways, and we gave it a little bit of time before we added more to the position. But we, believe it or not, we bought higher because of that breakout. So I would do that with Canadian Tire as well. Make sure that the breakout is legit. Wait a couple weeks or so, and then buy more.
Okay. We have Stephen in Saint-Lambert, Quebec. Go ahead, please.
Hello. I'd like to have your thoughts on Whitecap. I have a hard time figuring out where WTI is going these days. It's going up and down, up and down. And maybe one last thing, if you think the dividend is safe. I'll hang up and listen to your answer.
Thanks very much.
Can't tell you about the dividend safety, because that's the job for my CFA. He usually tells me that stuff. But yeah, Whitecap, like every other oil stock, well, not every other oil stock, but a lot of the oil stocks are trapped and, in no man's land, right? Really, oil stocks have been in a trading range, or a swing trading range, as we like to look at it. So these are the kind of stocks that, you try to play the swings. And as a technical guy, I don't argue with those swings. I like buying stuff at the bottom of those price swings, and I like selling near the top. Now, usually what I'll do, like I mentioned with Cameco a while ago, is I give it a bit of time. So if you see the breakout, like Canadian Tire we just talked about, if it breaks out and it seems like it's staying, I will actually add more. But if it doesn't, then it starts to roll over, I sell. So I think there's maybe a bit more upside on Whitecap as it reaches that level of resistance. But I don't know if I'd be piling in at this point. It's so close.
Thanks for the question, Stephen. Let's go to London, Ontario again. Mike, fire ahead, please.
Hey, Keith, I'm a big fan. Follow you on YouTube, and I love your bow tie. My question is... My question's about a Japanese company that's been doing very well lately. Actually, two stocks, Japanese, Mitsubishi and Mitsubishi Heavy. How do you see these two companies, especially given tariff uncertainty and Japanese yen volatility?
And can I just bother you for a sec? Are you talking Mitsubishi UFG Financial? Or
no, Mitsubishi and the Japanese...
Okay. And then there is a Mitsubishi Heavy as well. I don't know. Can you work with that, Keith? I'm not sure if we have the charts.
Yeah, I need the charts.
Which chart do we have? Sorry. Well, let's put up UFG and hope that's close enough. There's a 5-year on UFG. Okay.
Yeah, and Mike, I'm sorry I can't look at the chart you're referring to, but I can comment on this and maybe it'll apply. So there's an uptrend, and it's as simple as I can make it. I mean, higher highs, higher lows equals, remember, high up is good, down is bad. And I get paid to do this stuff. It's amazing, right? But, higher highs, higher lows, stay above the 200-day, which it clearly looks like it is. This is a good stock. I would buy on every dip, and it actually does appear to be, pulling back to that trend line right now. So I'd be a buyer.
Okay. Thanks for the question, Mike. Hope that was helpful. I hope we had the right Mitsubishi there. Valentine in Burlington, Ontario. Go ahead, please.
Hello. Hi. I'm invested in two natural gas companies, Tourmaline and ARC Resources. I would like to reduce my exposure. So what do you think about Tourmaline?
Tourmaline.
So you're looking at reducing exposure?
Yeah, I think that's what he said. Yeah,
Okay.
yeah. I'm just looking here. We have seen some selling today, actually, in natural gas.
Yeah, it's down about 30 cents or something. We like, so our big theory in the market is that hard assets are coming into a big cycle right now. So we own natural gas, we own metals, we own uranium, we own gold, we own all, and we like natural gas more than oil. And
why is that?
Well, we like there's sort of three parts. This is Craig talking to me. I'm a mere chart guy, but there's sort of three ways to buy producers, right? So there's the pull it out of the ground guys, the producers, the midstream, and then there's the delivery guys at the other end, your FedEx delivering your local barrel of oil or gas. We like the pull it out of the ground guys, and at least Craig does. And so the whole sector, we have a government that's very encouraging here in Canada on nat gas, so that's good. We have European markets that are very strong for nat gas. We have a technical formation that, it's been bouncing, but it's if we look at nat gas itself, it's made a nice bottom. This is a producer, but we think that gas, if held over the next year or so, will play into that longer-term cycle, and it's one of the commodities we like to own. And Tourmaline is a good company. We own it ourselves. We own Tourmaline. So so you can see that is making higher highs and higher lows, and it has broken out from that base. So we're quite bullish on nat gas itself, which we think will translate into the producers over time. There's some lag, but we do think there's a lot of ingredients there for nat gas to do well. We're taking this, though, as we're usually pretty short-term traders, but we have a bit longer-term view on our commodities right now.
Okay.
So,
when we come back, speaking of that, we'll have a look at Keith's past picks. Now, Keith was on our show March 12th of 2025, so our focus is short-term here. That's the way Keith rolls, certainly for these past picks. His first idea was the TLT, which tracks the US 20-year bond. You can see it has slipped over the period, indicating that interest rates yields have gone up a bit. But so just remind us, this is a short-term play.
Yeah, I mean, what we're trying to do is play, we're a little wary of the market. We're not bearish. I don't like anybody to interpret that I'm bearish, but we're just trying to be defensive. So we hold some, and you'll see in my current picks that I've got a defensive play in there as well. But this is one of our defensive plays. Why? It's got a bit of a pattern, and we were trying to buy it. In fact, we were buying it near the bottom of its range. It's starting to pull back again. But our target is really around $90. We're not expecting huge bucks on it. We just look at it as a fairly, sideways, benign position for now. Well, we think that the U.S. market has more risk in the equity side than normal.
It isn't. You think of bonds as being, not very volatile, but if you'd bought this at the end of 2020, when yields were low, you would have paid about $157.
Yeah, you would have been licking your wounds in a big way right now. Yeah, no, right now it's trading sideways, so we don't expect much from it, but we think it's an okay place to maybe make a couple bucks on. So.
Let's get on to Keith's next idea. This one has been beating other big oil stocks. Imperial Oil up almost 20% over the period.
Yeah, we just took profits on it too. So, because we actually rolled it into natural gas. Per the last caller, we were talking about Tourmaline. So we said, okay, this is great, So we got a nice profit on our Imperial Oil, and we rolled it in, as you'll see with some of the nat gases. They're near the bottom of their trading range. So we rolled it into a couple of them. So, but it's still a good company. I mean, it's broken out. So one could choose to stay in the stock. There's nothing wrong with that company. So.
And then your final idea was cash. And when we talk cash, we're talking a money market fund, for example.
Yeah. We have. I think we're actually using their used to be called Horizons. Now it's called Global X, and the ticker is cash. And all they do is buy a bunch of high interest savings accounts, and you just make whatever it's making, about 3% or something. So it's just a defensive, hold some cash position.
I mean, it comes down to philosophy, doesn't it? Some market watchers say, well, you should always be in the market.
Yeah, and there's nothing wrong with that. It's our style's a bit different.
Okay. Keith Richards, the one and only, will return after this. He's taking your questions on technical analysis, 1-855-326-6266. Let's head to Hamilton, Ontario. Chris, go ahead, please.
Good afternoon. Thank you for taking my call.
Pleasure.
I'd like Keith's view on Nutrien. It's sort of stalled for the last little while, and I just wondered what his outlook is. Thanks very much.
Thank you.
Well, we own Nutrien. We like Nutrien, and we like the U.S. counterpart, Mosaic. It's part of our commodity theme. I will admit we have a bias there towards commodities. But I mean, if we look at the bigger picture, downtrend ended. This is a rounded bottom. Now, try not to get too excited, fellas, when you hear that. But it's just forming a neckline there, and it's trying to break out. Hasn't, but there's all the reasons fundamentally and technically that this chart is set up for a potential breakout. Mm-hmm. So we've owned it for a while because we were kind of buying it off of this, probably around here, I believe, around $80 or so. But we actually think that it could get quite a bit higher. You may have to be patient because it's a commodity and there's a big cycle at work here.
But you like the look of it. Yeah,
I love
just
it.
building.
Yeah. We like the stock. Yeah.
Okay. Let's head to Markham, Ontario. Anita, fire ahead, please.
Good afternoon, gentlemen. Thank you so much for taking my call.
Pleasure.
Keith, my question is on Shopify. Could I have your opinion on this company, please? Do you see a lot of growth in this company, or should I just take the profit and run? I'll hang up and listen to you. Thank you.
Shopify.
Well, I can't give you the fundamental growth. You do have to pay attention to the old highs. And you're getting closer to them, around $200 or whatever it is. It does look like the last peak, my little peak and trough rule. So you've got a higher peak, and it looks like a higher trough because the recent peak does appear to be breaking the last. So I would expect that it probably will get to the 200 area, and what is it right now? About 175. So you got a few bucks on it on a probability basis. From there, that's when maybe you should start chewing your nails. I'm not saying it will stall there, but it has before. In fact, it kind of did a double top back in 21. So I would be kind of okay with it for the next little while, but as it gets closer to 200, just keep an eye.
When it gets back towards that record high.
Yeah, those record highs. And it hit it twice in 21, which makes me think that there's going to be some old buyers. Remember, there's always a buyer and a seller. So there's some people go, if I ever get $200 again, and that causes selling pressure. So just keep that in mind.
Yeah, it may not be logical, but it's quite understandable.
It is what it
is. Yeah. Jacob in Toronto, go ahead, please.
Kind of okay with it for the next little while, but as it gets...
Sorry, Brookfield Infrastructure, Jacob?
Oh, yes, good afternoon. I'm sorry I've been here. I'd like to ask your guest, please, about the BIT at Brookfield Infrastructure, please. What do you think of it? Thank you very much.
Thank you very much.
Okay. Well, Brookfield, I'm pretty sure we have it in our income platform. I don't manage the income platform. I manage the equity platforms. But so Brookfield is, it's a dividend stock, and it's okay. I don't think it's an exciting looking chart, which is why I don't own it as an equity position. But I don't think it's an unsafe stock to own. So I would say if you like the dividend, and that's where we've been playing it, continue to own it.
We have Paul calling from Orangeville. Go ahead, Paul.
Yes, I ask about energy fuel, and I just sold it at the high, and it's been down for the past 2 years, and it just went up. What is he thinking about? What point is it good to get back in again?
Sure. So energy fuels are active in uranium, vanadium, rare earths, stuff like that.
Yeah, and I see why you sold it, Paul, because it is parabolic. I mean, if we were to pull up a chart that had momentum indicators, you'd probably see they're all overbought. So it's likely it'll pull back. But the thing is that breakouts are good. We've talked about a couple so far that, when a stock breaks out, and it can stay above that old breakout point for a little bit of time, a couple, 3 weeks, then you've probably got a winner on your hands because, the longer the base, so that was the trading range, up and down like a yo-yo, then boom, instead of stopping, it broke out. That's good news. It flushed out all these old people that bought at that prior level around $10 or so, 10 or $11. Now you got rid of all those people, so it's probably going to go higher. So you're asking, well, will it retrace? Because it's a bit parabolic. So it would probably retrace to the breakout point, which might be not too far below, but maybe $11 or so. So I would be inclined that so long as it doesn't break that old breakout point around $11, like it doesn't break below, I'd buy more. This is actually a pretty good looking chart.
Paul, thanks for the question. John in Oshawa, Ontario, go ahead, please.
Hi, Keith. I want to know about Franco-Nevada. I see that it's lost a lot of value, and I was wondering if it is a good time to get in.
Franco-Nevada. Let me have a look. FNV, maybe we could put up a 5-year chart.
Yeah, I've got that here. So this is I like commodities. I have a longer view on commodities than most of my picks on BNN. Oops, I'm going to redraw that line. But if we look at that sort of 5-year picture, where forever it was stuck at around $200 as a lid, and then there's this classic breakout. Now it's pulling back. And like I was saying to the last caller, he was asking where would be a good point to rebuy something that maybe is parabolically moved. Well, this stock parabolically moved, and look where it's headed. So I don't know what this dollar figure is, but probably around $200, okay? So let's assume that neckline is at $200. If it can hold $200 and bounce off of that positively, I'd be buying it. So it's actually another one of these great looking charts for so long as it holds the neckline.
Oh, okay. Thanks very much indeed for that question. We got to take a break. Keith Richards is taking your questions today on technical analysis. 1-855-326-6266. Let's head to Montreal. We got Tony on the line. Tony, fire ahead, please.
Good afternoon, gentlemen. How are you guys?
Very good, and thanks for calling.
Very good. I'd like Keith's take on Bombardier. And there was also a big investment from Bernard Arnault, the owner of Louis Vuitton. He purchased a stake in FlexJet for $800 million. Should be a good endorsement for the industry.
That's interesting. Thanks.
Yeah, interesting. Well, we were talking about the new jet. What was it called? Global 8000?
It's the Global 8000 from Bombardier.
It's just the next, everybody wants one.
It's said to be the fastest civil aircraft since Concorde. It'll go just under the speed of sound.
Yeah, as soon as we get a break, I'm going to put an order in for one, okay? Anyways, it sounds like a great toy for someone wealthier than me. But this is a great breakout. I probably don't need to tell anybody that there's a parabolic move. And so often, you never know when the parabolic move is going to end. The only thing you know is it will end and it'll pull back, okay? Right. So we saw that on the Franco-Nevada just a minute ago. We saw the big parabolic move and pull back. Well, this is maybe it goes to here. I don't know, but at some point it'll pull back. And often, the pullback will land well above the last peak, okay? So I don't know where it might be 135 or might be, I'm not going to guess. But parabolic moves pull back. And the net look, though, is that it's on a tear. And so that's a good thing. Like up is good, down is bad, simple stuff. So I would just, maybe if I was a new investor, I'd maybe see if it pulls back because you're probably buying it a little overbought. But, it's still a good looking chart. Just wait for a pullback.
And we were joking about would there be a gigabillionaire sitting there in her slower old private jet, and she's going to feel like I'm a loser.
What did I do wrong?
Perry is in Toronto. Go ahead, please.
Hi. My question is about Pfizer. It's coming down every single day. Thank you for letting me know what's going on. Have a good day. Bye.
Pfizer.
Pfizer with a P. I don't know the fundamental reasons, but, we talk about up is good, down is bad. So, okay, kids, what are we looking at here? That's a downtrend. And, how do you tell? Lower highs, lower lows. And that's what we've got. You never assume that the downtrend is over until the chart proves it. At this point, Pfizer is telling us that the last low and the last high are being taken out, and therefore you don't buy this stock. And if you own it, I would wait, see if it rallies a bit, and I would get out because it doesn't look like a good chart yet.
Not calling to you by any means.
Not calling to me.
Don is in Prince George, BC. Go ahead, Don, please.
Yes, I'd like to, good morning, first of all, gentlemen. I'd like your opinion on CNR. It's been moving sideways for quite a while and moving downwards the whole year. And do you think the tariffs have an impact on this?
Thanks.
I think the tariffs have an impact on everything these days, but even when they don't, there's perception, right? But it probably will affect this industry. I'm not drawing a great line here, but an old support level between 20 and 21 is being tested right now, so far successfully. It did have a support level at around 140 or something like that. So my suspicion is that you'll probably see some support come in. And I don't know what this level is, I'm sorry, but let's call it 130. And you can see, going back a number of years ago, it was moving in a bit of a consolidation. So it may just start up that consolidation here again. That's just a guess. But what I will tell you is that I wouldn't be selling it at this point, but I wouldn't be loading up on it. To me, it looks like a swing trade, and it's got to prove that. At this point, I'd be kind of neutral on the position.
Okay, let's go to Edmonton. Sophia, thanks for calling.
Oh, thanks for taking my call.
Pleasure.
I have a question about CNQ. When is the time that I should get in? And is this a stock that I can hold for a long time? Thank you very much.
Thanks very much.
Well, Shannon, that's a good question because right now, all the oil producers are more or less, stuck in no man's land. And you can kind of see that, there was an uptrend into about 24, and it's been, kind of heading down. What you want to see is with any of the oil stocks, like we're out of oil stocks. We sold our Imperial Oil. I mentioned that earlier in the show. We moved into gas. So we don't mind a sideways pattern. If we look at the old pattern here, that was okay because you could own it in between there and see if it breaks out. Right now, it still to me kind of looks like it's in a gentle downtrend. So we did own this stock a while ago. We sold it. This is going back several months ago because of this very reason. I don't know that I would buy it yet. That's I want to see the downtrend end.
Here's an email from Sharon. Would you ask Keith, please, his technical opinion on Maple Leaf Foods? That stock's been doing well lately.
Yeah, that's quite a rip. So there's your lid, and that may be a legit breakout. It might be testing the old 22 highs, but that's a good picture. So if this breakout holds, and I'm always using that if word because sometimes breakouts don't hold. They do this, they head fake you, and then they go back down, right? Mm-hmm. But if it can hold, and it appears to be so far breaking out, then you probably actually will be looking at the stock a lot higher than here in the next couple of years. And that's because, what's contained it in the past has changed. It might be something fundamental or just, big institution buying it. I don't know what's the cause, but, it could have a good future. Just give it a bit of time.
Okay, and we have one more. Ash, could you please give me your analysis of Target?
Okay, one word.
Not liking it?
Not liking it. I mean, there's no support being seen on this stock. It's there's your high, there's your low, and it's just a continuous succession of lower highs and lower lows. I wouldn't buy this stock.
Okay, not calling to you at all. Okay, we're going to have Keith's top picks right after the break. Tomorrow on Market Call, our guest is Richard Orell, portfolio manager at Croft Financial. The topic, exchange-traded funds. And if you missed our Market Call show, as if that could ever conceivably happen, maybe somewhere in the multiverse, check out our daily podcast. It's on iHeartRadio and other platforms. And you can watch full episodes on our YouTube channel. Let's get to Keith's first idea. It's EWJ, the iShares Japan ETF.
Yeah, so this falls into another, we're always chart guys first, but this falls into another theme we've been following, which is get some international. The U.S. markets, we think, are a little riskier, as I mentioned at the beginning of the show. So, on a relative basis, we've been emerging markets, and we have Japan as well, and that's today's topic. So Japan broke out. This is the ETF, the EWJ, and it's now consolidating again. But we think that it's that breakout from that very long lid is very constructive. So we were able to diversify. We bought our first leg about 2 weeks ago in this. And we think it's just coming off of I think it was actually about a week ago. It's just coming off of the bottom of the current consolidation pattern, and we think it's a good place to start buying.
Your next idea is Canadian Apartment REIT, CAR.UN, CAP REIT, as it's known. What attracts you there?
Decent dividend, as many REITs are. We actually have 3 REIT positions. Why? Because to us, they're kind of value plays right now. They all pay dividends, and they're a little bit overlooked. Mm-hmm. So again, with our view that the markets may be in for maybe more volatility. By the way, one of the things I didn't mention at the beginning of the show is that August, September, and October, you see higher VIX levels, which is a sign of volatility, than at any other time of the year. So with that in mind, with more volatility possible, you want less stocks with lower beta. And this fits in, pays your dividend. It's in a bit of a holding pattern, but you're buying it. We were buying it off the bottom here. We think it'll go to the top of the range, which might be $50. They make a dividend along the way, and then we sell it when we feel like getting into some more beta.
A yield of about 3.4% right now.
Yeah.
What were the other 2 REITs that you like the look of, Keith?
We have so the CAR. We have. So we have the iShares ETF.
Okay,
But we have one more. Sorry, I'm just.
That's okay. Sorry, I sprung that on you. Yeah, go ahead.
It's the Northwest apartment or something like that.
Oh, okay. Yeah, that rings a bell.
I'm such a ticker guy.
No,
I just
XRE.
look at the charts.
Yeah, for sure. XRE is the.
It's just the overall index.
Yeah,
ETF.
XRE, the TSX Cap REIT Index, and I have that one up about. Total return of 8%, counting its distribution over the past 1 year.
So we've got that, and is it RE? Sorry, I'm totally blanking on the other one that we have.
It doesn't matter. Okay, but Northwest Healthcare Properties.
That's the one. Okay. That's the one. Thanks, Andy.
Symbol on that one is NWH.UN. I'm not sure if we have the chart for that, but NWH.UN, and that one total return of about 8% in the past year if you include dividends. So that one has come off its high.
Yeah. So these are just like kind of, to us, value plays. I mean, we didn't buy in this period because we don't buy downtrends, but it's been basing, and all of the REITs, you just saw the CAR, it's in a swing pattern.
Sure.
So we just like the idea that if you can buy somewhere near the bottom of a swing pattern, you can trade out near the top, you earn a dividend, and this one's been chugging along for us. It's it's a good defensive play. I'm not saying you're going to make 20% on this stock, but it's probably going to be okay. So.
And a yield of about 7.3%.
Yeah, on this one, the yield is huge.
Pretty high.
So it's.
And then earlier you discussed your bullish thesis on relatively bullish on natural gas, and ARC Resources as your last idea.
Yeah. So again, you'll see it's near the bottom of a trading pattern. So. And it looks like a lot of the gas producers right now. So there was an uptrend, and it is making a little bit of it's got a little bit of resistance, but it's touching that longer term trend line. The lows are getting higher. If we zoom in a bit, this low is still higher than that low. There's nothing breaking down in this chart. So we think it's we've owned it for a while. Like I think we bought it sometime in 24, so probably somewhere in here. But we think that right now it's an okay day. In fact, we put our money where our mouth is because we added another 2% to our position. We always leg into things. So we just bought another leg. So we like it. And it also pays a decent dividend too.
The fact, we touched on this, the fact that a resource stock like that will obviously be linked, at least in part, to the underlying commodity.
Absolutely.
Does that complicate the technical analysis?
Well, we look at both. And typically, the commodity will lead the producer because the market wants to see if the commodity is going to move, and that therefore maybe adds to profitability eventually, but not right away for the producers. So you'll see some lag, and we're seeing the commodity. We looked at the nat gas chart earlier, and you saw that nice little uptrend, right? So we think there's plenty of upside potential, and it's a longer-term theme for us.
Yeah, they're ratcheting down the temperature forecast for the United States, parts of it anyway, for late July, and so that's put a bit of pressure on natural gas today.
It's just waves and stuff, and we do have a belief that the nat gas price will go up over the next year or two.
And ARC Resources, a yield of about 2.8%.
Yeah.
Finally, maybe Control Room, could you put up Bitcoin? We're very tight for time. I'd love to see what that chart is saying to you, Keith.
Okay.
So and it's near record. Maybe I'm not sure if that captures the most recent, but does anything jump out for you there?
Oh, I got to actually, I have something that viewers will be interested in. So I've done a lot of studies on Bitcoin versus gold. And they're literally like dance partners. So when gold starts to lag, and you've seen gold kind of go, a little bit lately, it's been a little bit sideways. I mean, it had a good day today, but generally speaking, gold is a little bit sideways lately. Bitcoin becomes the lead dance partner. And then vice versa, when Bitcoin starts to slow, gold becomes the lead dance partner. So right now, the cycle is that Bitcoin's the lead dance partner, and then that'll change.
Keith, thank you very much.
Okay, good seeing you.
Keith Richards, thanks for watching Market Call. Have a great day in the markets.